The majority of our clients have invested in Bitcoin, but not all of them. So as we sent this out and said we were updating our our investment policy statement to include Bitcoin when the ETFs come out, that we'd like to add it. So far, no one's opted out. In fact, we've had a number of people say, hey, isn't it reasonable to expect that the price would go up? And if so, I don't want to wait until that happens. Like, shouldn't I be buying more now? So it's actually, we have people buying more now, which I think is great.
Howdy, I'm Hannah Newinch-Wonder, a production lead at a soybean seed facility in Central Illinois, and you're listening to the Vance podcast.
Welcome back to the podcast. I'm glad you're here. Today, David Oransky returns. David is a CPA and a certified financial planner and a good friend of mine. And last week, I got a letter from David that shocked me. He was writing it to all of his clients, and he said, for the last year, we've been talking about holding at least 1% of your portfolio in Bitcoin, but now I want to tell you that I am confident enough that this is an important part of the economy, and you should move that from 1% to 5%. This is a bombshell. There are very few level-headed, conservative financial planners that are saying something like this. And so I thought, David, if you're willing to put it in writing and send it out to all of your clients who trust you the most, then I want to sit down and have a talk with you. So what you are about to watch is another great conversation about Bitcoin, but this time we go in totally different directions. You'll notice that David, after having a bunch of time communicating with so many of his clients, has a great way of explaining things to an audience that maybe is a little suspect of Bitcoin. Everybody knows that listens to this podcast that I have strong feelings about Bitcoin, but it's great to have somebody like David to explain it from a very different perspective. So I think you're going to enjoy this conversation. We're going to get to that interview in just a moment, but first, a couple of announcements. Last week, a couple listeners poked me to say, where can we have a conversation about the podcast? There were some things that they wanted to discuss, and they didn't know where they would find other people talking about the podcast. So first, you can of course go to YouTube and use the comments section. Also, Spotify is building out a really robust Q&A system that allows me to interact with you. But if you really want to talk about the podcast in a place that I am spending my social media time, then go to X. That's where I'm at. I've started to pay for the blue check mark, and it's given me all these features that have made it way more valuable for me to spend time on there. So if you would like to engage with me about the podcast or other listeners, just make sure you tag me at Vance Crow. On February 8th and 9th, Legacy Interviews is heading to Monticello, Indiana, where we're going to be recording legacy interviews. If you've thought it might be a wonderful thing for your loved one to sit down with me to record their life stories so that future generations can know their family history, but you thought maybe the trip to St. Louis wasn't going to work for you, then consider signing up for one of 6 slots that we have available on February 8th and 9th. We've got a bin-dominium set up, that's a grain bin turned into a condo, and we've got a great space to be able to record these. And if you would like to learn more, go to legacyinterviews.com/Indiana to sign up for one of those slots. All right, without further ado, let's head to the interview with David Oransky. David Oransky, welcome back to the podcast.
Thank you. Good to be here.
Man, you wrote one of the most provocative letters I've ever received from a financial advisor, and you may be one of the only financial advisors in the country to be putting forward such a bold idea. You said in your letter just last week that you think people should be moving from a 1% allocation to a 5% allocation of Bitcoin. What made you decide to take that bold step?
Yeah, I probably am only one of a handful, and I probably know most of the others. And mine probably seem smaller allocations than what many other kind of advisors that are into Bitcoin would recommend. But it's been a journey. So I first started learning about Bitcoin in late 2019, spent a few months reading about it before I even took any action. So it was early 2020 when I first started exploring it and experimenting with myself. And then it took another year and a half, 2 years of researching it before I was bringing this to clients and saying, hey, this is something you guys should consider. I think this is going to be an important asset in the future. But I realized that the general consensus of this is that it's, fringe or a scam or whatever. Let's start with wherever you're comfortable. And kind of became a 1%, not because there was any magic of 1%, but because it was an amount that a lot of people could get off zero. It was a target that was small enough that's like, okay, I could lose 1% without, it really affecting my financial plan. that's a reasonable target. The real goal was just to get people off zero and continue learning about it. And so in 2022, at some point mid 2022, we actually like formally started recommending a Bitcoin allocation to our clients rather than just encouraging them to learn about it. And the majority of our clients have some Bitcoin exposure, and not within the portfolio directly that we manage, but actually they own Bitcoin in self-custody, which is great, especially considering most of them are baby boomers and retirees. Like this is a demographic that most people thought would have zero interest in Bitcoin, or even if they did, would not know how to handle it. And so we're pretty excited about that aspect. The 5% number has always or long been a number that I've wanted people to get to. I just didn't feel like I could recommend that to them without them understanding it.
0 to 1 is a lot easier than 0 to 5.
Yeah, and so kind of the conversation was like, I'd love to see you at 5%, but you need to get there on your own. You can borrow my conviction for the first 1%. Let's get you there. Let's get that kind of lifeboat or that minimum amount there. And then let's work through. And some did. Like some kind of fell down the Bitcoin rabbit hole, started learning, started sending me podcasts and what have you read this article or this book. And some of those people are at 5% and probably higher now. But what's changed now is the major thing holding us back from recommending it was kind of the regulatory uncertainty. This was something that, within the industry, just broadly people thought of as nothing, and the regulators were very wary of it, which I think is legitimate. I mean, there's been tons of scams in the quote crypto or digital asset space, and they don't really see the difference between Bitcoin and all those. I think over time that distinction will become very clear, but as of now, there's still a lot of murkiness around that. And so we wanted to do right by our clients by recommending it and helping them do it without getting ourselves into too much hot water with the regulators. And so now what's changed is the SEC lost a court case against one of the companies that had filed for an ETF. And the courts basically decided that the SEC was acting arbitrary and capricious towards them. And so they have to go back and either they reevaluate the application, either come up with a new reason for why they have to deny it, or they have to basically approve it. And so because of that, you've now had all these major asset managers, traditional ones, BlackRock, Fidelity, Franklin Templeton, all sorts of them, get in line trying to apply for this ETF. And the SEC's been having conversations with them, and it looks like this is probably going to happen, likely in 2024. Some people think very early in 2024. And if that happens, suddenly we have a vehicle that is SEC approved. Bitcoin suddenly becomes far more legitimate in the eyes of the general public, the regulators, the custodians, everything. And we've been waiting for kind of the green light of where we can just make this really easy and low friction for our clients. And we think we're close enough now where we feel comfortable saying, hey, let's increase the allocation to 5%. The problem is we're still those products aren't available yet.
You mean the ETFs?
The ETF, the spot
ETF.
ETF.
Why don't we stop there for a second? When people hear ETF, if you're not in the market, what is an ETF and why would somebody want to hold Bitcoin that way?
Yeah, so an ETF is just an exchange traded fund. So think of a mutual fund, which is just a pool of money where investors come together. There's a manager that takes care of all the actual buying and selling of the underlying securities. And you just get to hold this simple vehicle in your brokerage account, in your IRA. Just makes it really easy. And the exchange traded part just means that rather than trading once a day like a mutual fund, you can trade it throughout the day, much like a stock. It's a very efficient way to manage stuff. It's more tax efficient than a mutual fund. It's easier. Most new pooled investment vehicles are ETFs for a number of reasons. I think that part for this is probably less important, the distinction between a mutual fund and an ETF. But the idea is that you'll be able to buy it in your Schwab account, in your Fidelity account, and potentially even in some retirement,
your 401k that you have with your business.
Yeah. Now, in terms of Bitcoin specifically, it actually strips away almost all the attributes that are what I think amazing about Bitcoin, what makes it magical. And so I have mixed feelings on the ETF. I'm really happy that it will, I think, bring a lot of new people into it and they'll start learning about it. I think it's good from my standpoint as an advisor where it makes it more legitimate and hopefully less concerns about compliance. But I also have this, as someone that believes in the thesis of Bitcoin, that's like, you're taking away all the kind of self-sovereignty value of Bitcoin. Bitcoin is the only form of portable wealth that can be transferred peer-to-peer and, taken across anywhere in the world in your head or sent anywhere in the world in a matter of minutes. There is no other asset that can do that with those qualities.
Yeah, everything else, somebody has to say, yes, I agree to allowing you to do that, or you have to carry huge volumes of it. Like if you're going to bring cash,
But you can't even do that, right? Yeah, gold and physical cash would be the next closest things, bearer instruments, basically. The problem is and I think this is over time, more and more people wake up to this. Different people, it's different events that trigger people to pay attention to Bitcoin. For some, it was the Canadian trucker convoy during COVID. For others, it was the war in Ukraine. For some, it was what's going on in Gaza, where people are imagining, wow, if I were in a situation like that, it would be very valuable to have some form of wealth I could take with me. If you have to leave your jurisdiction, you can't take anything. You're not taking your real estate with you. You're not taking your stocks with you. You're not taking your bonds with you. You're not going to probably even be able to take very much cash or gold with you. I mean, those might be your best, but any considerable amount is going to be taken from you.
And if you have a credit card, just like the truckers found out, they just turn it off or watch where you go.
Bitcoin is this kind of truly unique asset. And as soon as you put it into an ETF, you strip all that away because now you're back into a permissioned system where it's no different than a stock. The thing you retain is the price action, which admittedly for a lot of people is their initial attraction to Bitcoin. The reality is most people, I think, enter Bitcoin because they see somebody else has made a lot of money off it and they get in. And then some of those people stick around to actually learn what it is and become kind of diehard Bitcoiners. And it's no longer about the price in dollars they could be worth, but actually kind of what it enables in terms of society and for their own personal life.
Yeah, when you say diehard Bitcoiner, I think like there's a sense because when you meet somebody that's really into Bitcoin, they want to talk about it all the time.
Yeah.
But there's something like truly beautiful. I talk with people about this all the time. Like when you go to actually understand like how does Bitcoin work, and then you come up with a problem in your mind and you're like, oh, well, what about this? And then you go find out how they answered it. And every single time you're like, this is so elegant that it makes me feel like, in a sense of awe to watch it. And I mean, I tell this all the time. I probably said it the first time we were on a podcast. Like when I built a node and I downloaded the blockchain and I have this computer, it's only dedicated. The only thing it is doing is downloading that blockchain. And I have that thing cranked up as far as it'll go, and I have fiber internet at my house. It took 5 days for that thing to download. And that's when you realize like, oh, this isn't an Excel spreadsheet. Oh, this isn't like something you go pick up at the bank or whatever. Like this is truly, I have a record of every single transaction that has ever occurred on the blockchain. And I have the same one that all the other nodes and miners have.
Yep.
You feel a sense of like connection to the world that's like powerful.
And at first it seems too complicated. I don't understand it. I just want to stay in the dollar system. And then after you learn about it, you're like, oh my goodness, this is actually, like you said, elegantly simple and robust and like anti-fragile in many ways that it has this. Yeah, I used to jokingly, before I kind of was converted, call it magic internet money. I still think it's magic internet money. I just no longer mean that as an insult. It's like it has this magical property. Like what an amazing design. And that's been tested. Like, it'll continue to be tested, but it's amazing that it's come this far. And yeah,
well, I think like you mentioned all the stuff that people see, right? The exchanges go down, the fraudsters, the Sam Bankman-Frieds, the like all these things. And it's funny because if you're a Bitcoiner, if you're like they call them Bitcoin maxis, where you're like, I only care about Bitcoin. All the other ones are either shit coins or like, I just don't care about them, right? Like maybe they do something valuable, but compared to this is what I'm gonna stay focused on. When you really understand Bitcoin, it is not hard for you to spot the like exchanges that you shouldn't be on and the people that you shouldn't be near, because you see like, oh, these are people that are trying to take the beauty and elegance of it and they're grafting off of it. They're parasites on it. So that's why like, if you don't want to worry about your money getting stolen and used in exchanges for some crazy, party kid, just take it off the exchanges, own it yourself.
That's the beautiful thing about Bitcoin. You actually can self-custody it. Like you don't have to worry about evaluating who to trust. And this is often what I tell people, like, where should I buy my Bitcoin? And I'm like, I actually don't really care where you buy it. I care how you store it.
Right.
Like Matt, you shouldn't store it anywhere. If you can get comfortable with self-custodying, that puts all the power in your hands. You don't have to worry about trusting anybody.
And the things like wallets, at first it's like, oh, this is complicated, but it's not any more complicated than the first time you started to use email, and you're like, okay, like there's people are going to type into their computer, they're going to go to a browser and then go to a website and then do these things. Like all of those things now are intuitive. You don't even think about them.
Yep.
But when you're first setting that stuff up, that every single step feels like overwhelming.
Yeah. And the first time you send Bitcoin to a wallet that you created, and you're like, I hope I did this right, because otherwise it's gone. And there's surprisingly few stories of people messing that up, like because it actually is pretty simple. And the software solutions that help you do it today they still have a ways to go, but they're anyone who's reasonably technically savvy, they're already there where they're, a layperson can do it.
So going back to your letter, you hit the send button. 20 seconds before the send button, are you thinking about regulators or attention that this is going to bring to you outside of helping your clients?
No, I mean, we've been very cautious to kind of walk that line between telling our clients what we think is important for them to know without crossing into where we could get into confusion with regulators. Like, we don't manage any Bitcoin for people. Like, we don't take custody of it. We don't trade it for them. We're just advising. And, to me, we also, help people evaluate, whether they should buy real estate or a home or, other things
what kind of
outside
health insurance
of the portfolio.
They should be getting, yeah.
And so my life would be a lot easier if I could just go push all the buttons for them. And there's some days where I'm like, I should just do it, but it hasn't been worth the risk of misunderstanding with the regulators. So no, I don't worry about sending out advice. Like, I think that is our job. And it actually disturbs me that a lot of advisors won't say what they think is right simply because they're worried about how the optics of that might look. I think moving to action, actually doing it, that is where I am a little bit more cautious and probably maybe more conservative than I need to be. But I don't really want to jeopardize. I won't be able to be in a position to give this advice if I'm, cross a line and do something that the regulators don't like. So I wasn't so concerned about that. I was interested to see, like I said, the majority of our clients have invested in Bitcoin, but not all of them. And so as we sent this out and said we were updating our kind of, our investment policy statement to include Bitcoin when the ETFs come out, that we'd like to add it, but giving people the ability to opt out. Like, we're not forcing this upon them, at least yet. We're not giving them the ultimatum. And so far, no one's opted out. In fact, we've had a number of people say, hey, if this ETF really comes out and, we're entering this next cycle of Bitcoin, isn't it reasonable to expect that the price would go up? And if so, I don't want to wait until that happens. Like, shouldn't I be buying more now? So it's actually, we have people buying more now, which I think is great on their own, or there are some kind of proxies available, like within the public markets. Like, there are futures ETFs, which I think are terrible long-term vehicles, but for a short-term thing, they can work reasonably well. And then there's some other products that have indirect Bitcoin exposure or other stuff. So there's some options, but at this point, we are not using our discretion to go buy Bitcoin for people or any Bitcoin products. It's all client directed with our kind of, guidance and assistance in figuring out what makes sense for them.
Yeah, it's funny to think about if the ETFs get approved, let's say the first or second week of January of 2024. Mm-hmm. If you're an advisor that hasn't been giving this guidance, now all of a sudden you have to go from zero, I don't think you should have Bitcoin, to now let's open it up and essentially put it in your account.
It's going to be interesting because I know a lot of advisors that are kind of interested, but they won't touch it until it's all greenlit from, the powers that be. And it will be interesting to see. And, what do they do? I mean, I've had the benefit of learning about this for the last 4 years. And like you said, they're going to be kind of starting at point zero. I'm really glad that we kind of have a head start in kind of understanding this. I think also, though, I don't think everyone's going to jump at it. I think a lot of them are too concerned about volatility. I've had conversations with other advisors, and given my, this David, like, we agree on this other stuff. Tell me about this Bitcoin thing. It sounds crazy to me. And I explained, they're like, oh, I could never do that for my clients. It's like, why? Well, because it, it's too volatile. It could lose a ton of its value, in the course of a year. And I was like, yeah, but zoom out, like the time horizon here is 10 plus years, and they're like, oh well, that's too long of a time horizon for us. Like we have to manage to 2 to 3 year time horizons because otherwise our clients will be disappointed in performance. And it's like, oh well, that's a very different first principle we're operating off. I'm operating off the assumption that these are going to be clients indefinitely, and that I'm trying to make sure that they have enough money to sustain the rest of their life, sustain their lifestyle. I'm not worried about measuring my performance over 2 to 3 years. Yeah, there will be a lot of volatility in Bitcoin. There'll be volatility in other stuff.
Volatility in life, right?
Yeah. And so that was like kind of like, I can't believe people are that short-term focused. And Bitcoin is one of those things that forces you can't really, I think it'd be really hard to own Bitcoin or understand Bitcoin and not have a, what we call low time preference, where you're thinking long-term, willing to sacrifice today to have a better future further out. And I think once you get into Bitcoin, everybody starts thinking more that way. You start seeing the world through a different lens, and you are more patient. So like when I buy Bitcoin, I'm not worried about what its value is in a month from now or a year from now or 4 years from now. I'm thinking 10 plus years out, and I don't mind volatility in between. I just care what the destination is.
And therein lies the beauty, right? Like the thing that has been taken from us in modern society is the ability to have a low time preference, right?
Yeah.
Like there's so much, like I ask this all the time when people tell me that they're not into Bitcoin. I'm like, well, do you teach your children or your grandchildren how to open a savings account? Do you walk them down there and say, here, put your money in here? Because what would a savings account have to be earning in terms of interest to beat inflation? And it's certainly it'd have to be doing better than whatever the
last couple of years, maybe the savings accounts work for teaching kids about money. But yeah, until interest rates went back up and they were zero. I mean, my wife and I talked about this when we had kids. Like, are we going to go open a savings account that earns 0% or close to that? Like, what lesson are you teaching them if you do that? That like, oh, you put your money instead of buying something today, you put your money in the bank, and down the road you'll be able to buy even less stuff with it. No, I mean, so when you have that environment, it actually encourages people to consume sooner. And in the short term, that may boost GDP and make things look good, but you're really just also destroying your future.
Yeah, and that's the same thing as the financial planner that's looking 2 to 3 years out. It's the person running the treasury or being able to determine how we spend money in the budget as a representative that says, I only care about getting elected in 2 years or in 6 years. So for me, spending money that we don't have is fine. And like inflation, I've always been like very, very wary of inflation. But as you start watching the way that it seeps into the world, I mean, it is such a dark and terrible tax that the leaders have done to us, right? Where they're like, we're going to give you this money and pretend as though it's some kind of largesse that we're offering you, when the reality is like, we're stealing this from the future.
And I think people are feeling the symptoms of that. They just don't know the cause. Like, you talk to people and there's this sense that like, I'm working harder and harder and yet I'm not getting ahead. And I think a lot of that is, and also the term inflation is a very nebulous term that I think is intentionally made murky so that it's a shifting thing. Inflation used to mean like the expansion of the money supply, like the dilution of the value of your dollar. Usually when people are talking about inflation these days, they're talking about the consumer price index. Like, how much does this basket of goods cost and how does that change over time? And most of the things that are in that basket are things that technology and innovation help you produce more with less. And so that basket of goods is actually getting cheaper and cheaper in real terms over time. But because they're printing money, for simplified terms, those goods are actually getting more expensive in nominal terms. And so it's this weird thing where people just assume that everything gets more expensive over time, but in reality it doesn't. It's just mostly that the value of your dollar is becoming less and less in buying.
Oh, and I'm with you on this, and we may different, but like, I cannot believe how many people for years and years and years were like, Vance, it's not inflation that we have to worry about.
It's deflation.
It's deflation. Yeah. You'd be like, show me a situation like where the entire society is worse off if you can wait and make those purchases because you are saying the value of saving is higher. I mean, China had this problem for a while. Now they don't have that problem anymore.
Well, I agree with you, but I think it's important to point out the distinction when we're talking about deflation. The thing that central bankers are worried about with deflation is like a rapid deflation, because our whole system, monetary system, is built on credit. Basically a bunch of IOUs that if they can't be, one person's asset, If you own a bond, you own an IOU for someone else to pay you money. That asset is someone else's liability. If that person can't pay off that bond, then your asset also disappears and the whole system starts to implode. And when you have deflation, that's what can happen. So they worry about the whole system imploding on itself. That's only an issue because of our monetary credit-based system.
And the time link that you're looking at it,
Yeah.
right? Like if you say, well, those things crash, but on the long term, then you get rid of that giant bubble.
It is, but I
that's
think
there.
there's a valid argument that we've come so far. I mean, we've been operating the system since 1913. That it's kind of like the forest fire analogy. Like, yes, if you had let the little fires burn, these little deflationary bursts, that would be healthy. That would be a normal system. But at this point, we've not let those little fires burn, and now when we eventually have a fire, it's gonna be big. And so I don't blame. It would be a miserable experience for everybody if they allowed a deflationary collapse. Ultimately, something like that is probably going to happen.
Didn't you think it was going to happen in 23? Like I thought it was. I was very like, here it comes. Here it is.
We got close to some banking issues, but they were able to plug. I mean, it's always a risk, but the thing is, they have the ability to effectively print money. And so anytime we get deflation, they have a lot of tools to kind of counteract that, which makes the risk, the other guardrail is, inflation, which too much inflation is a bad thing too. So anyway, I think where you were going though, with where deflation could actually be good, is in a world where, we were on a Bitcoin standard. You had, money wasn't credit, but money was actually bearer assets, something like Bitcoin. And you have society innovating and new technologies coming out that allow us to make more things and everything with less inputs. Then that would be a healthy deflation where over time things get cheaper and cheaper. And so you can save a certain, amount of money, and that money may not grow in nominal terms, but what it buys does increase. So its purchasing power increases, and it's a mind shift, right? Right now, people want to put their money to work. They want to see their money earning interest. They only need that because the things they're trying to buy are also going up. If everything was actually allowed to get cheaper like it should be, most things at least, then you wouldn't need the value of your money to go up because it's buying more and more over time. That would be a very healthy deflation scenario. Getting there is going to require a completely different monetary system. And so, as it relates to Bitcoin, I do think that Bitcoin is the best potential solution to this unsustainable track we're on. And when I say it's unsustainable, I really mean it's unsustainable, but I don't know when that ends. I don't know at what point it actually breaks. I mean, we've been on a fully fiat, meaning just government decree, not gold backed, not gold linked in any way system for 50 years, since the 70s. Nothing's broken yet. You go all the way back to 1913 when we got the Federal Reserve. Nothing's broken yet. That's been over 100 years. Like, how many more chapters are left in this book? I don't know, but I still don't see how it can go on to infinity.
Well, and to your point, you've said this many times before, like the gold bugs have been predicting this sort of thing for a very, very long time. And their stashing away of gold didn't actually pay off. Well, it's done better in the last few months, but not really.
Right. I think that can, I think that's a great lesson to think. Like they may eventually be right, but they haven't been right yet. And if you go all in on something and you're too early, you're almost not much better than being wrong. And the ironic thing about the gold story is I think they will eventually be right, but because Bitcoin has now come along, Bitcoin is better than gold in almost every single way, other than it hasn't been around thousands of years. And so the gold bugs may ultimately be right with their thesis and still not actually profit off it in the long run if they don't also own Bitcoin. But this goes back to, although I'm a big advocate of Bitcoin, I don't advocate for anybody to be 100% Bitcoin. In fact, I think that'd be insane. I also don't advocate for anyone being 0% Bitcoin. I think that's, potentially equally insane. And for our clients, we mostly work with people in their 60s and 70s who have retired or are close to retired. They're already financially independent. They live below their means, and they have the ability to allocate their portfolios such that if Bitcoin goes to zero, they'll be fine. We also have the ability to have enough Bitcoin that if Bitcoin goes where we think it will go, and it happens in a shorter time frame, and other stuff in their portfolio gets hit hard, that they'll also be fine. And to me, that's really our job as advisors, is more the risk management. Getting rich and staying rich are different philosophies. Our clients are mostly already financially independent. We're just trying to play more defense, which is avoiding mistakes or avoiding things that could go wrong, and always asking, what if we're wrong? And so what if we're wrong about Bitcoin and Bitcoin goes to zero? They'll be okay. I don't think you could say the same thing for a portfolio these days that has no exposure to things like gold and Bitcoin. Like, things could go wrong and you might not be okay. And so within the realm of people that advocate for Bitcoin, we're probably more measured and a little bit more reserved than the average person, but it's because we're trying to make sure they're okay. We're not trying to hit grand slams for people that don't need it. We're trying to view it as a risk management.
So when you say the Bitcoin price goes where we're thinking it may go, like how should somebody understand that? Like, it'd be ridiculous for you to be like, I think it'll be at this amount by this time, but like,
I'm very hesitant to put a number on it. I think it's going up in dollar terms for sure, for two reasons. One, I think adoption will increase. Demand will increase over time. This happens in cycles. People keep seeing world events that make them curious or interested. Maybe I want a little bit of that. But even if you didn't have that and demand just stayed static, there's going to be endless money creation just for our system to continue functioning. And so when you have a ever expanding amount of dollars divided by a fixed number of Bitcoin, like, the value of that Bitcoin in dollars goes up. Not even because it's becoming more valuable in terms of its purchasing power, it's because the dollars are becoming less valuable. So you have both effects. I don't know which one has a bigger impact over what time period. I think they're both going to impact the price of Bitcoin. But at some point, the price of Bitcoin in dollars almost becomes irrelevant. And like, I don't get that excited or depressed when the price changes. I mean, I got into Bitcoin in early 2020. It, when it was around $10,000, it dropped to $5,000. I was like, well, and like literally right after I bought it. And I was like, well, I wanted to buy a little bit more. Now it's half off. That's a good deal. And then rode it up to what? Close to 70,000, 60 something $1,000 and back down. And like, I'm like numb to the price because I'm not buying it for gains in dollar terms. I'm buying this as a, 10, 20, 30 year plus time horizon. And position size is important. I can afford to lose it all. Like, I haven't gone all in on Bitcoin, but I think I've hedged my bets enough that I will be okay no matter what. And that's exactly what we're trying to do for our clients. That's really the name of the game. We want to make sure that you're going to be okay no matter what happens, at least for all the things we can foresee.
In the world of Bitcoin, there's a popular podcast called The Rabbit Hole Recap. And one of the guys on there, his name is, he goes by Odell, Matt Odell. And he has a great phrase for people that are not in Bitcoin. You hear this phrase and you're like, what does that even mean? But it's just stay humble, stack stats.
Yeah.
And what that means is, like, don't worry about whether the price is up or down, whether people agree with you about Bitcoin or not. But you're supposed to be stacking, they call them sats. So sats is short for Satoshi. Satoshi is the smallest unit of a Bitcoin. So 0.070 zeros and then
100 millionth, yeah.
Yeah. And I think that is like one of the, if you become a Bitcoin person, that's the like mantra that you want to take into your heart, because the initial feeling, and I have a good buddy that we both have a good friend that just bought it, and he was like, riding high as the bulls were running these last few weeks and just loving it. And you're like, I've seen this before because it's going to come back down. But the reality is, if you can just continue to sock away, just convert your dollars in tiny amounts to Satoshis, eventually that pays off. And it may not be a year from now or even 10 years from now, but like the fundamentals indicate to people like you and me, that is going to be a very beneficial thing to do.
I would want to own Bitcoin even if I knew for sure the price would never go up.
Oh, interesting.
Because it provides portable wealth that you can take with you. It is the only thing that does that. And that is true utility value that I would want. Even to me, the fact that it has a lottery ticket attached to it, that the potential price appreciation in dollars for Bitcoin is so significant, is just that, a lottery. Like, great, I got a free lottery ticket with this. That's actually not my main interest in buying it. I'd want to own it even if expectations for future returns were really low.
That is fantastic. So a couple of weeks ago, I was at a farm credit system. So the farm credit system is like one of the largest banks in the U.S. They do 45% of the lending to agriculture. And they invited me to come in and talk about the edge of chaos. So they were like, hey, come tell us about where you get new ideas, how these things get into popular culture. And I talked about Bitcoin. And for the first time ever when on stage, because I've been invited to talk about it a few times, but for the first time ever, I didn't talk about the price. I only talked about, I brought it up and I said, here is Riot Mining in Texas. Mm-hmm. And what they did was they built up a bunch of miners And they went to the electrical grid in Texas and said, hey, we're here to buy, huge amount, gigawatts of power, and we're going to run it through our miners. And then in last August, when there were rolling blackouts, looked like they were imminent for Texas, the government came to Riot Mining and said, hey, we would like to use that energy. Riot said, that's fine. And the government paid them $37 million. Now, people were super up in arms. $37 million for a month of electricity, that's highway robbery. But if you think about what it would have cost the citizens of Texas for an hour of a blackout, let alone 5 days, right? 37 million is a steal. And that's where you're looking at Bitcoin and you're saying, this can create resilience in our electrical grid that could be truly profound and really make it so the value of generating more energy than we've ever created before is getting paid for. You don't have to wait for some kind of government subsidy.
Exactly. It will encourage the use of kind of these alternative energies. It is location independent. You now have the ability to basically move energy from anywhere in the world because there's all sorts of straight energy. You have these.
The Bhutan is a great one. They have all these hydroelectric dams.
Okay.
They have all this water coming down in Bhutan. They can't do anything with it, so they built all these hydroelectric dams and just plugged Bitcoin mines right into them.
Yeah, you have that. You have these, natural gas wells that aren't
Up in
commercially
Alberta,
viable to capture and transport, but you're just releasing methane into the atmosphere, which is way worse than CO2 in terms of its warming effect. But if you instead put a Bitcoin miner on top of it, you can use that gas, turn it into CO2, which is less harmful, and make it profitable. You're no longer having to force, companies to do this with, worrying about regulations or subsidizing with the government. You actually make it a profitable business endeavor to also do things that, other people would find to be very valuable in terms of the environment. And so the externalities of Bitcoin are actually really positive. Like my interest in it is predominantly like its monetary aspects, but you look at the other impacts it has on society in terms of, stabilization of the grids, allowing for more diversification of energy sources, changing people's time preference to less consumption now, just society-wide. Like I think all those are really positive things. And so it's funny, like I've never really been into ESG investing. My approach has always been, no, you buy the best investments and you figure out how to spend your money and your time in ways to help bring about the world you want, because simply investing in certain companies or other doesn't really change much. But in a way, Bitcoin is like the ultimate ESG investment. It's, agnostic to politics and all that. It's open to anybody. It's free, open source. It's good for the environment, I would say. That's a big misunderstanding, kind of what we just talked about. A lot of people think it's bad for the environment because it uses energy. It actually has a net positive impact, I think, on the environment. It's the ultimate ESG investment. And I think it has great prospects as a financial investment also.
Well, and in working for Monsanto for all those years, I had the experience of having people be convicted about something and not know very much about it.
Yeah.
And I see that going on, the exact same thing occurring with Bitcoin, right? So people will come up to me after that talk, and they'll be like, yeah, but, and then they have something like, yeah, but we're wasting all this energy, right? If we weren't doing that, then that energy could be used for something else, or it might not drive the price up. But like, you have to open it up. And just like I was saying before, like every single time you're like, I found its Achilles heel, you open it up and all of a sudden you realize like, oh wait, this is a way to make it so the trapped natural gas in Alberta no longer has to be flared. Yeah. Oh, this makes it so Arizona can build out a more resilient electrical grid so that way we don't have to worry about blackouts.
And people are slowly figuring that out. There's a few people within the kind of more ESG financial space that have really been converted and become huge advocates of Bitcoin in terms of their mission isn't the monetary aspects of it, it's the environmental. They just see it as one of the best tools to do that. And so I'm overall very bullish, not even just in terms of price, but in terms of just adoption, what Bitcoin could do. I think there are still a lot of hurdles. There's many people, powers that be that really would not like Bitcoin to be successful because it threatens them. But the direction of the overall sentiment and understanding is only increasing.
I mean, it seems like we've moved from it being a radical idea in the Overton window, first an unthinkable idea to radical, to now being like acceptable, right? Like some people would accept it. And eventually, as these spot ETF comes up, like there'll be some amount of policy. So it'll move right into the center of it. My concern with the ETF is that this is a backdoor way to control it. It'll be like,
mine too.
well, the only safe way to own it is with a registered financial advisor who can make sure you're getting what you paid for. And like, I don't want any of that.
I worry about that too. That's my biggest fear of the ETF is that they'll basically say, hey, we've now provided you a safe way to get this Bitcoin exposure that you say you wanted. And so to protect you from yourself, we're now not going to let you get it any other ways and hold it yourself. I won't be shocked if that's the direction it goes. I ultimately don't think that will be successful, but it may take a while to work through.
Well, it's a weird thing to see people like Jamie Dimon and Elizabeth Warren, sitting in a hearing, teaming up to be like, oh, this is the refuge of scoundrels and thieves.
Yeah, and this is where I like to separate Bitcoin from everything else, because almost all the other digital assets in crypto, I think, are. I don't think they should necessarily be regulated that they can't exist, but I don't think they're worth looking at, and I think there are a lot of scams there. But it is very odd to see who's teaming up with the banks here.
And then to watch a group like BlackRock do their about face and say, actually, we think there's a lot of utility here.
The incentives for a company like BlackRock and JP Morgan are very different, though. JP Morgan's a bank. Bitcoin is a direct threat to their system. BlackRock is an asset manager. They earn money based on managing assets. And so if there is demand for people that want to hold Bitcoin, it's in their best interest to create a fund, charge a, whatever percent AUM fee on that, and collect that. So they're far, it's not an existential threat to BlackRock. They're just trying to make sure that they move to maintain their position. It's much more of a threat to a bank.
Well, that actually gives me some hope, because if people have disaligned interests here, then that means the people in the BlackRock position are much more, they may ultimately be, they're regulated and want the SEC involved in it, but at least they're not saying, well, we may switch over and ban it, but it makes more sense.
The other hope I have is that, Bitcoin is not just a U.S. thing. And so the U.S. has long reach in terms of their jurisdiction, but you'll start to get some game theory. The more the U.S. cracks down and tries to make Bitcoin, the more opportunity it creates for some other country to have a more open society, a more free market, and you'll see more innovation go there. And with that, you'll see more wealth move there. And so, one of my concerns is that, as the U.S., we try to hold on too much to like the things that are currently working for us in terms of domination, like the dollar, and that ultimately that will, in the long run, be bad for us. Like if we cling to it too much rather than kind of adopting and rolling with the times.
Well, and like Bitcoin will roll over even a big country like the U.S.
That's why I'm not that concerned.
If you look at the hash rate, so the hash rate is like the way that miners make sure that the blockchain is secure. So anytime you add more hash rate, you get a computer that is faster than other people, you get electricity to it, you plug it in, that adds to the overall hash rate. Yep. And the more hash rate you have, the more likely you are to get little bits of Bitcoin back.
Exactly.
Well, what's brilliant was that China shut down their hashing, right? Yep. So like all of a sudden, all these miners, it became illegal. So if you go look at the charts,
it was a huge percentage of the hash rate.
Yeah, and so if you look at the chart back when that happened, and it was like 2 years ago, it goes down, and you're like, oh no, it's all over. And now you look at the hash rate since then, it's a blip.
Right.
It's
like a lot of people thought that might have killed Bitcoin,
but it didn't.
And so every time there's a some sort of attack on Bitcoin, which at this point the attacks are mostly on the social political layer, not the technical side of it, and it doesn't die, it comes out stronger. It's kind of like that Hydra. You cut off one head and two more grow. And so in a way, like, although I'm not eager to see kind of what regulation comes and what they try to do to stop, I think it's becoming clear we're getting to the then they fight you stage. We're probably in it now. But unless they can be 100% successful, which I don't think they can be, I think ultimately Bitcoin emerges stronger and proves the thesis. It's like...
Yeah, and for people that are like trying to get their arms around this, even more than the price, like put that aside for a second. If you want to see a chart that is beautiful, go look at the hash rate chart. Because what that means is anytime you're watching that part of the graph go up, that means more people are saying, I'm going to take money from right now and not just go buy Bitcoin. I'm going to go buy the machines and plug them in to try and get whatever Bitcoin is being allocated through the subsidy, which is that 6.25, and the fees.
Exactly.
And like, it
So
is absolutely
there's two ways to
wild.
acquire Bitcoin, right? You can go mine it, or you can buy it from someone else that mined it, or and so there you have these built-in arbitrage mechanisms that keeps the whole thing very efficient. And that's what's so beautiful about Bitcoin. It is a self-contained system. It is completely outside of the traditional financial system. Yes, there's on-ramps and off-ramps that touch the traditional system, but it doesn't need any of those to function.
Right, because ultimately you could trade a horse for Bitcoin. If the person has Bitcoin and you have a horse.
And that's its main difference between gold. Like gold doesn't have a system built around it. It's just an asset. In order to actually transact with it, you have to have all this other distribution and infrastructure around it that is our banking system. And that's like, it's because gold didn't have that inherently that the dollar, had to become kind of the medium of exchange version of gold. And then eventually they just cut the link, and then you end up with what we have now. With Bitcoin, it doesn't have to happen. So
let's go a little bit deeper for which one of the things that's happened in the last few weeks, although it's gone up and then down, was that fees went pretty wild on Bitcoin. So you do have to, if I'm going to send money to you, I have to put that into a node, and then that node puts it in. Do you want to go high priority? Then you're going to pay this amount. If you want to go low priority, then this amount. And it just depends how much space there is on that block.
No one's
that's going
setting
every
the
10
price.
minutes.
It's a free market where people are bidding.
And so there are a lot of people willing to do the high priority.
It's like Uber surge pricing.
Exactly. And the pricing got high, right?
Yeah.
It became expensive. I read about a guy trying to move one whole Bitcoin, but from several UTXOs. So he had a bunch of wallets that collectively had one, and they wanted to charge him something like $17,000 to be able to move it.
Wow.
And you look at it and you're like, well, that's because, or $1,700, sorry, $1,700. And he's like, well, that's because it's so expensive right now. You may have to wait. And that's something that's an interesting thing about Bitcoin is like, it is not immediate, right? And there are things undergirding this whole system that are going to be more complicated that up until now haven't been a big deal.
Yeah, you're competing for block space, but the only other option is to ration it and give someone the power to decide who gets to go first.
Right.
And so like, in order to be a system that functions in kind of like a consensus anarchy system and not have a ruler in charge, you have to have a true free market like that. And if it's really important for you to transact right at that moment in time, it's going to be worth it to pay it, or you wouldn't pay it. You would wait. And so it allows you have flexibility, or if you don't have flexibility, you'll pay up. But there are also going to be, people aren't going to be buying coffee with Bitcoin on the base layer in a few years. I don't know that anyone's really doing it now other than for a novelty. And so like, the base layer is going to be used for those big settlement transactions. And that's final settlement when you do it. But you don't get final settlement in our existing monetary system for, if you pay on something on a credit card, it takes months before that's actually fully
Let me
settled.
slow this down.
Yeah.
If I want to send money to you, then I submit this to the blockchain. And then if I've paid enough money, it will go through in about 10 minutes. But we don't really know because of the way mining works.
Exactly.
And what you're saying is there's two layers. There's that layer, which is the hardcore, you are transacting Bitcoin. But then there's another layer on top of that you could do where you're saying we're going to use Bitcoin, but we're not going to make the transaction final. So a system like Lightning where you and I put in money almost like a pocket change, right?
Yep. It's like a tab we have with each other that either of us can close at any time we want. So you don't have to still you don't have to trust the person that they're good for because it's built into the smart contract. If I can say, I want you to set up on your tab, and you've had to kind of post collateral in a way, and that can immediately close. Think of it similar to like, in our current system, if you're buying a house and you're closing on the house, they're not typically going to accept a check, at least for the beginning. You're going to have to send a wire. Because a wire is basically final settlement. Like, could it technically be reversed? Yeah, but for the most part, it's considered final settlement. You don't use a wire when you go buy a cup of coffee. You put on your credit card because it's an insignificant amount of money. The vendor's not worried about it either because it's an insignificant amount of money. So for really important, serious transactions, you'll want to transact on the base layer and you'll be willing to pay those fees. For things that are more inconsequential, there's other options that aren't necessarily immediate final settlement, but they're more secure than our current systems. And I think this stuff's going to get built out. Like, I think we're still in the very, very early days of this user experience in terms of spending. Like, Bitcoin is not really a medium of exchange for everyday goods yet, and it probably won't be for a while. And that's going to be done on other layers, and we don't know what that looks like. And I'm okay with that. Like, the primary utility of Bitcoin today is protection against devaluing of the currency. It is a store of value, and that is utility in and of itself. That is a reason to hold Bitcoin. It doesn't need to be used as a medium of exchange now for it to have value. The fact when it becomes used as a medium of exchange, that's probably when the dollar system has, kind of crumbled, and that may be decades away. Like, I don't know. So those are kind of like, yeah, I'm interested to see what that stuff turns out to be in the future. But for now, I'm more interested in the store of value.
What do you think happens? An ETF comes out, or there's maybe, let's say, 12 different ETFs.
Yeah.
And then people say, hey, I want to put, let's say, 0.1% or 1% of my net wealth into this. Does that mean that they're going to be transacting all of those Bitcoin transactions? Like, do they, or will BlackRock buy a bunch and be like, okay, this one's for you and this one's for you? Like, because that will be an insane
there'll be
amount of
bigger
transactions.
When they're buying into the ETF, they're going to be they'll be buying shares of this ETF. And so as the demand for that ETF increases, you'll start to see the cost of that ETF go slightly above what the underlying Bitcoin is worth, which now creates an opportunity for a market participant like a bank, a big asset manager, a hedge fund to come in and say, hey, we could deliver Bitcoin to BlackRock. Let's go buy X number of Bitcoin, deliver those to BlackRock, and exchange those for shares of their ETF. And then we'll sell those shares of the ETF at a premium to all the people that want this ETF because it's now gone above, and which then brings the price back down to to par with the underlying assets. So there's all these built-in arbitrage mechanisms with the way ETFs work that incentivize everyone to keep those prices at parity. But no, it's not like if someone's like, I want to go buy $10 of the ETF, there's going to be a $10 transaction on the blockchain. This is almost like its own layered technology on top of it.
But it still will create, it'll create transaction. Place, right?
Oh, absolutely. And so, I wouldn't be surprised if fees on the base layer go up. I don't know. I don't have any guess of like what they go to, but there will be more activity. There'll be a lot more demand for Bitcoin is my guess. I mean, maybe this ends up being nothing. Maybe everyone that wants Bitcoin already owns it. I don't know. But I know anecdotally from talking to people, there's a lot of people that would like more exposure to Bitcoin. It's either too much friction or too scary for them to hold their own keys, and they just want to buy an ETF that's easy.
Or maybe don't have cash, right? Maybe they're at their corporate, like accounts. If you're in a corporate job and you're like, hey, we're going to spend the money that we get as our paycheck and everything that gets matched, we're going to put into our 401k. Yeah. And now we've got this money that's been sitting there and it's never been able to go after Bitcoin this directly.
Yeah, 401k plans, there may be more restrictions on because the employer would have to, they kind of decide what the menu of options are.
Oh.
And some of them have a self-directed brokerage account where you can then go out and buy whatever you want. But even sometimes there's restrictions of those. So I'm not, within an IRA, which is an individual retirement account, like where you kind of can pretty much buy anything you want, you'll be able to, but within company 401ks, it'll probably be hit or miss.
Oh, I did not realize that.
Yeah, it depends on the rules of the plan because the employer has a responsibility to provide you with good options, and not everyone believes Bitcoin is a good option yet. And we don't know how long it's going to change those minds.
So the halvening is coming. It's looking like it might be somewhere in the middle of April.
Yep.
What is the halvening?
So the way all Bitcoin has been created is through the mining process. And the mining process is basically writing all the if we wanted to send Bitcoin back and forth, that has to get added to the ledger, and that's done through the process of what we call mining. And miners make money in two ways. They get fees from the transactions, so you can bid on and say, here's how much fee I'm attaching to my transaction, and they start at the top of the list with who's paying the highest fees, and that's how they decide the order at which they include it. There's also this block subsidy, or the Coinbase transaction, which I think started at 50 Bitcoins per block and then went to 25. So it keeps getting cut in half approximately every 4 years. So then it was 25, then it was 12.5, and now it's 6.25. And estimated to be April, it's going to drop to 3.125, if my math is right there. And so what you have, the reason that is, Bitcoiners get excited about that is right now, in order for the price of Bitcoin to stay even, all that new Bitcoin created, the 6.25 Bitcoin that are created approximately every 10 minutes, has to find a buyer. Somebody has to buy that at the prevailing price. Otherwise, the price will fall until it brings in new buyers. And so theoretically, if the price will remain exactly static, that means that 6.25 Bitcoin is finding a home at the current price. And so there's, somewhere between 30 and $40 million a day of Bitcoin being soaked up.
To buy about 900 Bitcoin right now? Is it about 900 Bitcoin a day?
I can't do the mental math in my head that quick.
I think that's
at some point I
it
did. That sounds right, yeah. And if it didn't, the price would go down. Well, now what happens? So let's say you have, $30, $40 million buying Bitcoin every day, and suddenly the amount of Bitcoin that it's chasing gets cut in half. You suddenly now have new price discovery because there's not enough Bitcoin to go around. So the price has to go up until some people fall out of the market. And so how much does it go up? Does it go up double? Like some people, that's an overly simplistic model. It probably doesn't go up double just because of the halvening. But it does cause upward price pressure until a new equilibrium price is determined. And I was going to say, theoretically, this should be an efficient market and people should front run this and it gets priced out ahead of time. I think if you look around at the people with big amounts of money, the large asset managers in the world, they don't get Bitcoin or they're not really allowed to buy it. So those are the people that normally would be keeping the markets reasonably efficient by, voting with their money. I'm not sure that's happening. So although I tend to be a believer in efficient markets, or at least that you should act as though they're efficient, I don't actually believe they're purely efficient, but that, just like the tires on my car aren't perfectly round, they're close enough that I assume they're round and everything's fine. And that's generally how I think about public markets. I'm not sure that's true with Bitcoin, at least yet. I think there's a lot of asymmetry in information. People don't get it. And I think even the people that get it don't necessarily have enough money to purely arbitrage that away. So I think the halving is probably a positive catalyst that causes the price to go up, all else being equal. But all else is never equal. Who knows? There could, on the same day, there could be a new bill that comes through Congress that's going to ban Bitcoin, and that takes the wind out of the sails. I don't know.
One of the fascinating things I heard this just the other day, a guy talking about when the halvening happens, if you look at the stock to flow ratio, it'll actually be a more scarce than gold. Yeah. So explain stock to flow.
So stock to flow is the stock is the existing stock, how much, in this case, Bitcoin is out there in the market, which is currently 19 point something million. There will only ever be 21 million. And the flow is the amount of new Bitcoin getting added. We typically measure that over the year. So how much new Bitcoin is produced every year divided by, we're doing it the other way. So the stock, how much Bitcoin exists divided by how much new amount is coming on every year. And the higher the stock to flow ratio, the more scarce the asset is considered, because the new coins coming in aren't really diluting the existing supply that much. And so gold, out of all the precious metals, had the highest stock to flow ratio. It's been the most scarce asset in terms of that definition, which is one of the reasons it became money over thousands of years, the best form of money. Silver was the second highest, which is why but it was a lot more abundant in terms of absolute terms, which is why silver kind of was the day-to-day transactions, smaller transaction. Gold was the, for bigger transactions. So now that Bitcoin is already on par with gold and will become more scarce in terms of stock to flow than gold here in a few months, if that's a major factor for you considering what is hard money, then Bitcoin looks even more attractive then. But I think it's also crazy to think about there will only ever be 21 million Bitcoin. Over 19 million of them have already been mined and are owned. And I think it's something like 80% of those haven't moved in over a year. They're held by, people, by Bitcoiners that are like, I'm holding on to this because this is what I believe. I'm not selling this unless the price goes up a lot. And even then, I'm not selling it to convert back to dollars. I'm selling it to make my life better. Maybe I'm buying a house. Yeah. Maybe I'm buying something else.
So let's walk through that more slowly, because if somebody's hearing that for the first time. So out of all the Bitcoin that are going to be out there, there's only 21 million that will ever be there.
Correct.
19 some odd million are out there. So 93% of all the Bitcoin that are ever going to be in the system are already, somebody owns them.
That's another 100 years before the remaining, 2 million are produced. Most of them in the next 10 years, but.
And then out of all those 93% that's already owned by somebody, would you say 80%?
I think it's somewhere around 80% haven't moved in over a year.
Meaning people are getting, we call them hodlers, right? Where they get them and they say, I don't care that the price jumped up to 40. It's not like I was waiting for, some sell point and then I'm going to do it. They're like, hey, I'm going to
Yep.
I'm going to hold on to this. And right now, the thought is that most of the Bitcoin that are being sold into the system are from miners who are saying, hey, we got bills to pay. We got to pay electricity. We got to pay staff. We got to buy more equipment. So we're getting these Bitcoin in. Maybe we're saving some out for ourselves. But if the price is where it means that we can cover all this stuff, we're selling everything that we can in order to be able to cover that.
Yeah, so if we get a demand shock, let's say the ETF actually does unlock a lot of demand, and there are a lot of people that are waiting on the sidelines, and they're saying, if the ETF gets approved, I'm going to allocate 1% to Bitcoin or something. If there's a lot of those, that's a huge demand, demand inflow there, and it's all going to be chasing a relatively small number of Bitcoin. And so that could cause the price of Bitcoin to go up pretty significantly. And
what is if people did your initial letter, not your 5%, but if people did your initial letter and said, I'm going to take 1% of my portfolio and put it into Bitcoin, I mean, that would be billions of dollars. Hundreds of billions of dollars.
Yeah, and I don't think everybody will, but over time, like if they keep doing 1%, like it's as the value of Bitcoin goes up, 1% of that of their own wealth is a smaller and smaller portion of the overall Bitcoin market cap. I mean, that's what has to happen, and this is why you can't get like a large company like Apple to add Bitcoin to their balance sheet. There's just not enough liquidity there. The price has to go up more before they can trade in it, because if they just put their buy a tiny little bit of their balance sheet, the market would move huge, and they don't want to do that. They need to have sufficient liquidity there. So as the price goes up and the market cap of Bitcoin increases, it actually makes it a more attractive asset for large companies, large pension funds. It needs to be a bigger, more liquid asset before it can attract them.
Yeah, right. I was just listening to Lynn Alden, who's like, she wrote a great book called Broken Money. It's a wonderful podcast. All you have to do is search her name and it's worthwhile. But she was talking about how at $40,000 a piece, there's a lot more institutions that can engage in it.
Yeah.
But until it hits $100,000 or even well beyond that, there's in pension funds and insurance groups that they can't touch it. They'd knock the boat over. They're giants. But to imagine a world in which Bitcoin's market cap does get up to that size, because right now the market cap, if you took all the Bitcoin in the world multiplied by what is the current price, that's the market cap, and it's around 800 million, I think, right now.
Yeah, somewhere in that ballpark, yep.
Gold is 1 trillion, so it's about...
Gold's higher than that. It depends on how you measure gold. Like, do you include all the jewelry? Do you just include what's on central bank? But I think gold's closer to like 10 trillion.
Okay.
I think Bitcoin has to about 10x from here to be gold, roughly. And then again, it depends on what measurement you want to use for gold. But
well, then I was going to say, because what I had heard, and I think maybe what I'm talking about is just like gold bullion or gold that you're able to buy.
If you look at just the subset, that you might be right. I don't know that.
And so that's about 1 trillion on that side. And then Apple, its market cap is 2 trillion. But you imagine that Bitcoin right now isn't as large market cap as Apple, but it seems entirely conceivable that it could be.
Yeah, I mean, I think Bitcoin is going to continue to grow and mature. And so like the trajectory of it, it's not 100%, but I have a lot of confidence to go there. I don't know over what time frame, but you see all these catalysts on the horizon, and like when there's going to be new demand, like if it gets to this step, then like that unlocks a whole other, layer of demand. It's one of these assets that you look at and it's like, this is a very asymmetric bet. And so people are, some people are worried to buy Bitcoin around this. Oh, it's, 40 whatever thousand, that's more than double what it was last year. It's like, yeah. And they're like, so I'm going to wait for it to come back down. It's like, yeah, it might. Look, it absolutely could lose, 20, 30% in a very short period of time. But you zoom out and look at like a 10-year time horizon, and it's like, it's very asymmetrical. Like, unless Bitcoin fails, which it seems very unlikely it's going to fail, then it's just a matter of time before it continues to grow.
Yeah, and that's like most large investments, like if you're not in it on, like, if you remove the top 3 biggest days where the stock made a move or Bitcoin made a move, if you take those 3 days out, you maybe wouldn't have made money, or you'd made way, way, way less. And so it makes sense. Like, things move quickly. It's like that gradually, then suddenly.
Yeah, I think you still have to manage your own psychology. So this is where I do think, like, for most people, dollar cost averaging, and meaning adding a little bit every day, every week, every month, however you want to do, like spreading out your purchases, for many people is going to be the right thing to do, because it manages your own psychology. When the price goes up, you're excited that you bought someone that's cheaper. When the price goes down, you're excited that you didn't buy it all before and you get to buy someone that's lower. And so you're more likely to stick with the plan. And that's important. Like discipline in investing is extremely important. If you can't stick with the plan through the roller coaster ride, you're going to get crushed. And Bitcoin is a wild roller coaster ride. Every 4 years or so, it loses like 60 to 80% of its value and then goes on to make new highs. But you have to be able to withstand that. And so you have to size your position such that you can handle that. And in fact, the only people I know most people, when they learn about Bitcoin and start investing in Bitcoin, they only go in one direction. They get more and more conviction about it. They get more and more comfortable with it. They want to buy more, and they only increase, the number of sats they own. The only people that I've seen go backwards are the people that kind of ape in. They go huge lump sum before they really understood it. They didn't know why they were buying it. They kind of got FOMO. They saw someone else, making money, and they go all in. And then they realize they were way overextended. When the price goes down, they freak out and sell because they don't want to lose everything. I mean, to me, that means you put too much in initially. Like when we're advising our clients, we are, the 5% is a generic. Like we will customize it for clients based on that. But in general, like that's an amount that they can withstand to do that. Even if that went to zero, they would be okay. I'm not someone that advocates for putting like 80% of your wealth in Bitcoin. Like if you're in your 20s and you want to do that and you're willing to lose it all because you have the ability to work, like that's fine. I'm not going to tell you not to do that, but I'm probably not going to advise you to do that either. And that's not most of my clientele.
So you've been around people that have like walked the path, right? They've like, gone from I'm not interested to, okay, tell me more.
Yep.
Walk me through the like average person's experience.
Initially they're skeptical. Like I heard this thing was a scam. What about this? And I walk up through the monetary history because that's what it clicked for me. And in my kind of role as a financial advisor, that's I think the most relevant. Like
that's what we talked about in the first podcast, right?
All that stuff. I will say that, probably initially most of our clients bought Bitcoin for exactly what I told them. Like you can borrow my conviction up to 1%. Let's get you there. And then they start paying attention. They start watching it. And the timing, this was just somewhat how it worked out. Like most of my clients got into Bitcoin in summer to fall of 2022. So they've more than doubled. So they're feeling pretty good right now, which is good. But I'm also like, I think,
and also a freak accident by you. It's not like you were like, I'm getting them in the right.
No, it was when I felt
time.
Comfortable enough. Like I was not going to bring it to them till I felt very, very comfortable that this was the right long-term thing. And that took 2 years of studying and having conversations. Now, before that, if clients would bring it up, we'd have conversations. But I was not proactively going to say, hey, this is something you should consider. I really think you should have some of this on your balance sheet. It's funny because, people hear that I recommend Bitcoin. They're like, wow, you're crazy. I'm actually a really conservative investor.
And crazy conservative investor. Not irrationally such, but like.
Yeah. Most of our portfolio is like passive, passive equities, U.S. government treasury bonds. Like it's very clean, very conservative, tried and true. We own a little bit of gold. We own some commodity exposure, and we own Bitcoin. And those are the things that I think actually strengthen the plan. Like those are diversifiers. Those are things that you're not getting that exposure anywhere else. And especially for people who are retired, having, a lot of retirees have 50% of their portfolio in U.S. government bonds. That is the safest thing in the current system. But it's very susceptible to inflation, which is why we use inflation-protected bonds for a lot. But again, you're just tying it to CPI, which we talked about may not be the best measure of inflation, but it's still better than nothing. But if we were to end up in a world where treasuries get severely devalued, which we saw over the last 2 years. I mean, if you held long-term nominal treasuries, you lost 50% of they lost 50+% of their value, recently. So yeah, Bitcoin has lost 80% of its value at times. Like,
but then it came back. Yeah.
But then it came back. The government bonds,
and the bonds and the treasuries, it's not like you're sitting there waiting for a ton of upside. You're just trying to mitigate
so in
downside.
some ways, like buying the Bitcoin is the insurance policy on the other stuff. And if it never pays off, then that's fine. You had everything. It's like buying insurance for us. Bitcoin's not technically insurance. Insurance are contracts, but I think you can somewhat think of it as a hedge on everything. It's outside of the system. The only two things that are really outside the system are gold and Bitcoin. Because you could argue real estate to some degree, but you've got to pay property taxes and other stuff. It's a little bit more complicated. It's not portable.
Well, let's go and talk about some of the things that happened in the economy in 2023. So we're at the end of December, and the thing that my nightmare that came true, but then was not as big of a deal, was that the banks were, many of them, insolvent. What happened there? Why did they?
So one of the biggest buyer of treasuries is banks, due to regulations and just less lending going on. So
meaning that like they would take in all these deposits because there's all this cash going around, and the government would come to the banks and say, you got to put this somewhere safe. You can't just let it sit in cash. Here are these bonds. Buy these bonds.
Yeah, they didn't really have to come sell them. But the banks bought them. They were on the list of things that were considered safe assets. And then when the Fed raised interest rates, the value of the bonds goes down. So suddenly their kind of equity, the amount of assets they have on their balance sheet to offset the liabilities, which are all their deposits, they are increasingly looking insolvent. And so that SVB, Silicon Valley Bank, was kind of the first one to go. And there was concerns that this would be widespread because the entire banking system is built on this kind of fractional reserve system. Like when you go deposit your money in the bank, they don't have it in a vault. They lend it out. In this case, a lot of it they lent to the government. And that whole system can come crashing down as soon as people lose confidence in the banking system. And so they had to kind of plug it. They rolled out programs that allowed the banks to basically borrow on those treasuries at face value. So, a bond you bought for $1,000 may only be worth $70. Bought it for $1,000 may only be worth $700 now. They could go take a loan out for $1,000, even though their asset wasn't worth $1,000, because it's, hey, when it matures, it'll be worth $1,000. So the Fed and the Treasury has a lot of surgical tools to help people or institutions they want to help, and the banking system is going to be one of those. But yeah, it was scary. And I'm, going back to being conservative, like I'm the person that for years has always been extremely diligent about checking our clients, like FDIC, their balances, that don't go over the FDIC limits, don't do this, and people are like, oh, you're crazy. When was the last time there was a bank failure? And this one was mitigated. They ended up making all the depositors whole, but like, it's just not worth losing sleep over.
And what changed as a result in the economy? I mean, one thing I know is that the government came out and said, if you are a bank owner, you are liable for all of these problems. So all the people that were owning banks are now much more aware that the government will let them sink if it has to. Yeah,
the government is probably less concerned about the shareholders of the bank than they are the depositors, which I don't know, I think is rightfully so. I don't necessarily agree with the idea of having unlimited FDIC insurance because I think that creates too much moral hazard. But I mean, this is one of the, like, we talked about this system, like we should have let the little fires burn decades ago and we haven't. Like, I don't know what you do if you're in this situation of the FDIC chair and like, are you going to let, all these people lose their deposits that you told them were safe? They were in government insured banks. Like, I just don't see any politicians do it. I think the reality is their banks are almost always going to get bailed out of the depositors because we do have the ability to effectively just print money. So I think that's always going to be the easier course of action, which is why, like, I'm not someone that believes we're going to have the deflationary collapse. I think that is always a chance, but there's enough tools that far more concerning is the idea of like high inflation. Because that's where they don't really have the tools to stop that. And so we're going to be kind of bouncing back and forth between, getting close to deflation. And then if we get too close, they start printing money and we are then going to have an inflationary problem. But all these things, woke me up to, like, again, Bitcoin, like having money outside of the system. Like, wouldn't it be nice if you could go to a bank and put your dollars in and not have them be fractionally reserved? Because especially when your bank's not paying you any interest on that checking account anyway, but there are no banks that are fully reserved.
Yeah, and we found out this winter they won't even allow them. So there was, what was the name of that one? It was out in
Narrow
Wyoming.
Bank and Custodia Bank.
Yeah, they came out and said, hey, we want to, you can do it. You can set up your own private bank, but they wanted to become a part of the overnight system, right?
Where Reserve, yeah.
And so they went to the government and applied, and the government said, and what they said was, we are not going to take any of our depositors' money and loan it out, and instead we're going to have depositors pay us.
Yeah.
You pay us, and what we'll do is hold your money for you securely and not lend it out.
Created too much of a systemic risk.
Why is it a systemic risk?
It's not a risk because the bank's doing anything risk. It's a risk to all the other banks. Because if you're earning 0% interest at, at a big bank, I'm not going to name any, and you can go, but it's fractionally reserved, and you can earn 0% at this other bank, and or you can pay a nominal fee, and you never have to worry about a bank run, you never have to worry about that. You're going to move your deposits over. As soon as deposits flee from one bank, that bank goes insolvent, and you create the whole system. I mean, it's a house of cards, and so they have to keep the charade going. Bitcoin provides that off ramp where you say, I just am not going to deal with the system. And I don't think it makes sense to fully take that off ramp, because for the time being, we live in a dollar world. Like, I own dollars, I own government bonds. Like, I think that's the bridge that we need to get there. But long term, I want to have at least some of my wealth that's outside of that system that can't be touched by that. Like, there is so much more uncertainty with the stuff in the traditional financial system than there is with Bitcoin. Yes, Bitcoin is the only thing Bitcoin doesn't have going for it is the general consensus that it's good, which is why it's so cheap. If everybody understood Bitcoin, the price would be crazy high.
I remember when last spring trying to explain to people what is a full reserve bank. Mm-hmm. People in banking, and them not understanding it, because it is so fundamental to our American dollar system. Because banks, actually, we talked about fractional reserve, they make most of the money that exists in the economy by saying, well, we're going to take your deposits and we're going to loan 90% of it out to this guy, and then we're going to take that back as deposits and we're going to loan 90% of that out. So they are creating
it's a game
money.
Of musical chairs.
Yeah.
So there is base money, what the Federal Reserve creates, and that's your Federal Reserve notes, so your dollar bills in your wallet. And then there are reserves, which are just on the Fed's balance sheet. That's what banks hold. That's money for banking institutions. When you go put money into a commercial bank, that money gets lent out or sent somewhere. And whenever they make a loan, they're creating money out of thin air. But it's the game of musical chairs. The chairs are the real base money created by the Federal Reserve. The players in the game are all those dollars and deposits at commercial banks. And when the music stops, there's not nearly enough chairs. And so they have to keep the music playing, or when it gets really bad, like what happened in 2008, they add more chairs to the system so that not too many people fall down.
Well, and it's funny to think about how quickly a bank run can happen nowadays, right?
Oh, yeah.
Because
that was the deal with SVB.
Right. Like, people are like, oh, they're having trouble. Well, then why don't I just transfer from this bank to that bank? But at the end of the day, you're not actually able to get it out. Right? Like, if you went to one of those banks and said, I'll just take $120,000 in cash, they'd be like, no.
To get cash out? Yeah, all you can do is move it to another bank.
Yeah, and hope that one's more solvent.
And as the banks consolidate and there's fewer and fewer banks, there's less and less even chance of bank runs between them, because if there was only one bank, it can't really be insolvent, and if they don't let you take your money out, it's just journal entries moving between people. Like, it's a more stable system. So it's not surprising that over time the banking system consolidates into a fewer number of bigger and bigger banks. That actually makes it easier for them to keep the music playing.
Well, what are you looking at for 2024? What do you think something to look forward to?
Something to look forward to? I mean, I'm actually pretty optimistic about it. I mean, although I sound very cynical on the economy and the banks, there's I'm optimistic, and part of the reason I'm optimistic is I think Bitcoin will bring a lot of good. I'm excited. Outside of what I do for work, I try to focus on things with my family and kids, and that stuff's all exciting. I love my work and what I do, and I love learning about Bitcoin and teaching people about it. I hope more people will start learning themselves, because I think you really need to have a good understanding of it to make sure you can withstand the roller coaster. But I think more and more people are waking up. I've had a lot of people reach out to me this fall, friends, other advisors, curious about it. So I think the tide's turning here. And we'll have to see kind of what happens with the economy here. I don't know. I thought 2023 was going to be a rougher year than it was, but this is why we don't go all in one area. We own stuff. We own everything, so that no matter what, we'll be okay. And I think 2023 was yet another year that showed that to be true.
Yeah, I think I'm bullish on life more than I've maybe ever been. I think the economy, I'm a little bit wow, that's kind of nerve-wracking, but you just try and diversify, and I have healthy kids.
I worry about it less because I own Bitcoin, honestly.
That's totally true. That's definitely true. Any recommendations on Bitcoin wallets?
There's ones that we typically are steering people towards now, but that stuff changes over time. I don't know. I don't want to have to make sure I update it.
I personally, I'll say what I think, and you can agree or disagree on these. To me, the most user-friendly when you're just like getting started, that is secure enough for my taste, is Trezor.
I agree.
And like the upside is like it's a very simple thing to plug into your computer. You can like figure out how to use it. It'll take you just a little bit of time to learn how does this security thing work. But then once you become more advanced and you're like, hey, I want to have something that's never touched the internet, that I'm really pretty certain is going to be separate from being able to be hacked, would be CoinKite. So the cold card.
Yeah. I think both of those are good. I think you described them right. The cold card is generally seen as being a little bit more robust, but it's also not nearly as user-friendly for someone that's just starting, whereas the Trezor is a pretty good balance.
Yeah, I think Trezor is like, it's almost like having an iPhone that you plug into it. It's like very simple, straightforward.
More than anything, though, I'm a big advocate of multi-sig. I don't know if you guys have ever...
You and I are on the different pages on this one.
So multi-sig is like, rather than having one key to open your vault of Bitcoin, there's in most cases 3 keys, and you need any 2 of the 3 to open it. And so by having 3, it means that if one of your keys gets compromised, it's no big issue. You have to have 2 compromised. It means that you could, not have to worry about whether you trust Trezor or Cold Card or any of the other wallets, because you can get different wallets. So if there is a bug in the software or a backdoor or anything, you haven't put all your eggs into one basket. It provides more resiliency in terms of like estate planning, and there's a lot of reasons that I prefer multi-sig. It adds more friction to moving your Bitcoin.
Have you moved stuff using multi-sig?
Yeah, so we often will use a company that helps coordinate it to make it really easy. I don't think, if you're going to do it purely by yourself, I think multi-sig is too complicated for someone that's doing it for the first time. I don't think it's too complicated. I think once you get comfortable doing single sig and all that, you can move to multi-sig. I prefer to use, I have some of each. I have wallets that are single signature, and if the idea is, portable wealth that you can take with you and get out, single signature is arguably better. If you're looking for something that is really resilient and unlikely to be compromised, I think multi-sig is better. But
yeah, I think there's definitely like ups and downs, and I see it, and I also am like, I don't want to include somebody else in on this.
You don't have to. You could do your own multi-sig where you hold all 3 keys.
And bury them in the backyard, or do well.
There's all sorts. I mean, it depends on kind of which threats you're most worried about. I mean, some people will have them in other countries and other jurisdictions. I don't think most people know. They keep one at their house, one somewhere else, and that way also they don't have to worry about their house burning down and losing, their keys. They don't have to worry about getting robbed and someone taking it. Like, it removes all the single points of failure. Because I think most people tend to worry about the threats of like someone stealing their Bitcoin, which maybe that is a threat. That's pretty unusual. More likely you're going to lose something. Mm-hmm. And if you lose your hardware wallet, signing device, or your list of words, the Bitcoin's gone. So with multi-sig, by having in different geographic locations, you minimize.
That's not entirely true. As long as you have the list of words, you can rehydrate.
But the problem with having multiple lists of words, if you want to have more redundancy for your backups, if anybody finds that list of words, that's unencrypted. They've got your Bitcoin. Whereas with multi-sig, if somebody finds your list of words, they've only got one piece of the puzzle. They can't take it. So I don't know. I'm a big fan of multi-sig. We could probably debate. I think this
is exactly Bitcoin, right? It's like, we've reached a certain point where you and I are arguing about the minutia about, multi-sig and how do you store it.
This is way down the rabbit hole.
Way down the rabbit hole.
More important is take self-custody of it if you can, so you don't have to trust anybody. And then you can decide based on your level of comfort and technical expertise and what threats you're worried about, whether single sig or multi-sig. And if you do multi-sig, whether you want to use like a collaborator to help, coordinate that, and they hold one of the keys, or you just want to have all 3 of them. But I think those are better discussions to have kind of on a one-off basis, depending on what the threat model is.
So final 2 questions. First one, if somebody's like, hey, what do I need to read, or what should I watch that will help get me on the path, what would you recommend?
My favorite is that new book that you Broken Money, Lynn Alden's Broken Money. I think if you want a comprehensive but still readable book.
It's a very intense book, though. It's like
very intense, but someone that really wants to learn, I think that's becoming my go-to. If you're looking for a much shorter version, there's both a book and a long-form essay called The Bullish Case for Bitcoin by Vijay Boyapati. I think that's not a bad intro. It'll give you a high level over the history of money and why, Bitcoin, it looks attractive. It's very readable. You can get the essay online for free. Just type in the bullish case for Bitcoin. He then turned it into a book and expanded on things more. I think that's good. I mean,
it's also surprisingly easy to read the Bitcoin white paper.
Yeah.
There's a lot you won't understand, but
everyone should
not
read it at some
impenetrable.
point. I think finding your first way into Bitcoin is hard. And I think it's different. For me, it was absolutely the monetary side of it. I was interested in the economics of it. Once I got through that, I immediately wanted to learn about the technical stuff. Okay, this is cool if it works. How do I know it works? And so if you're interested in the technical, there's a really good book called Inventing Bitcoin by Jan Pritzker that's written all with analogies. You don't have to be a computer science person to understand it. That for me was another key piece of being like, okay, I can trust this. There's other books that take it more from like the social and environmental. There's all different. What I find is that people enter Bitcoin from all these different directions. And then once they're there, they start to see, like you were talking about earlier, how it just like touches all these other areas and it's so like elegant in what it does. And so I'd say whatever aspect interests you, start there and then just follow your curiosities and go from there. Like I said, I don't know anyone that's gone down the Bitcoin path and turned around and said,
yeah, not for me.
Yeah.
So final question, because last time we did a podcast, I got a bunch of these questions, is if somebody wanted to get a hold of you or learn about
I am on Twitter at David Oransky, but I'm not that active on Twitter. Every now and then I post something. The best, like our website is laminarwealth.com. We mostly work with retirees, people in their 60s and 70s. But
how about I put a link to your letter on your on the show notes?
That's fine. Yeah,
that'd be a great way to do it.
I can make sure you get that.
Well, man, I knew from the moment I read the first paragraph that I was like, all right, we're having David back on the podcast. So thanks for coming by, man.
Thanks for having me. It's great to be here.